Well, now that inflation is the disease, where's the cure? There is none. Any more stimulus, and we end up with an overdose. And that is where we are right now. And what's keeping everything going, the reason that we haven't already seen a collapse in the bond market or a collapse in the value of the US dollar, the reason we've had a rally in the dollar is because the world is still has faith in the Federal Reserve. The world still believes that the Federal Reserve is serious about bringing inflation back down to 2% and that it has the ability to bring inflation back down, but it doesn't. Remember, it was the Federal Reserve back in 2008 or 2007 that said not to worry about the subprime market. It was contained. Of course, we saw how contained that was. But even before the subprime problems, they told us there were no problems. They said there wasn't a real estate bubble. And they said even if the real estate prices went down, it wouldn't hurt the economy because it was so strong. So the Fed has a very bad track record. And more recently, with respect to inflation, first the Federal Reserve said we didn't have enough inflation. Then when inflation got to 2%, they said, oh, well, we need to have it a little bit higher than 2% to make up for all the years that it was a little bit below 2%. And then when it got much higher than 2%, they said, don't worry about it. It's transitory. It's all going to go away on its own. And they said that for a year as inflation got worse and worse and worse until they finally admitted that it wasn't transitory. And so now they're claiming that they're going to solve the problem. But that's another lie. It's just like the transitory lie. They knew inflation wasn't transitory. So why didn't they admit it? Because they couldn't fight it. Because they knew that fighting inflation would crash the house of cards that was built on a foundation of inflation. Everything the Federal Reserve has done has been to artificially prop up an overly leveraged economy. Well, the minute they try to fight inflation, they knock out those props and everything comes collapsing down. That's why they pretended it was transitory, because they didn't have the guts to do something about it. It was only when the problem became such a big political, hot potato, and everybody was worried about inflation, that the Federal Reserve finally said, okay, we're going to do something about reining in inflation, but they don't have the ability to actually live up to those commitments. Now they can pretend and they can hope that inflation just goes back down to 2% all by itself because they're talking about how committed they are to bringing it down, but they can't do it without creating a financial crisis. In fact, the rate hikes that they've already delivered, even if there's nothing else behind it, will create a financial crisis. It's just a question of how much time. See, it already happened in the UK, or would have happened, and we're very close to that point now. But also, inflation is going to keep getting worse. Remember, as inflation was getting higher and higher in 2021, and then again in 2022, they kept saying peak inflation. Every time we had a little downtick in the headline inflation rate, they were like, okay, it's over, inflation has peaked, and then you'd see another new high in inflation. And so right now, people think, okay, we're going to get a little bit of a reduction from the numbers we had. That's probably true. I mean, you always get some type of ebb and flow. I mean, nothing goes in a straight line. So maybe the 8.5% year over year inflation will go back down to 7% or 6%. But then the next thing you know, it'll be 10% or 11%. It's not going back down to 2%. And at some point, the investors around the world are going to realize that once again, the Fed is wrong and that inflation is never going to go away. Inflation is here forever. And that's when the bottom drops out of the U.S. Treasury market, because right now the yield on a 30-year U.S. Treasury is still well below 4%, even though the inflation rate is double that. And that's at 30 years. Why would somebody want to lend the U.S. government money for 30 years at 3.7% when inflation is already 8%? It's only because they believe it won't stay at 8% for long. They think it's going back down to 2% and it's going to remain there for most of the next 30 years. That's not going to happen. The fact that we had 2% inflation in the last decade, that's the aberration. That's never happening again. We're going to have massive inflation because governments are committed to massive deficit spending. They've taken on so much debt. The United States has a $31 trillion debt right now, and it's already impossible to pay that debt. And it's not like the U.S. debt is financed with 30-year bonds. It's financed with one-year T-bills. All this debt is maturing. You've got debt that the government took on at 25 basis points, that it's rolling over at 400 basis points. That's a 16-fold increase in debt. And so when the world realizes that inflation is here to stay and that it's going to get worse, not only will the bottom drop out of the bond market, but out of the US dollar. This whole dollar rally is based on the Fed winning an inflation fight. And every time we got worse inflation news, the markets just thought, okay, that means the Fed's going to fight harder to win. The markets haven't come to the conclusion yet that higher inflation just means the Fed is losing. And eventually it's going to surrender because it's going to have to turn its attention from the problem of inflation to the even greater problem of a financial crisis and a depression. And when Powell first started talking about the Fed's resolve to fight inflation, it was predicated on the fact that the U.S. economy was so strong that it could take the fight in stride, that we could raise interest rates and not hurt the economy. We had this super strong labor market. Well, we've been in a recession all year in the United States. As much as everybody wants to deny it, we've been in one. It's going to get a lot worse. And once the Federal Reserve accepts and the public realizes how weak the economy is, then inflation is going to take a back seat to trying to solve these other problems. But solving the other problems is going to mean making the inflation problem, which is already bad, worse. You see, when we had the financial crisis and then when we had the COVID crisis, inflation was still officially below 2%. So the Federal Reserve could get away with quantitative easing. They could get away with 0% interest rates because they were able to say we can do this because we don't have enough inflation. But when they try to do it again, when the problem is too much inflation, they no longer have an excuse for creating inflation. And when they try to do that, it's going to blow up because then you're going to have a dollar crisis. Then you're going to have a sovereign debt crisis. And that is a whole new level of financial crisis. And what that also means is that the investments that did well in the aftermath of the 2008 financial crisis, or the ones that did well during the COVID rally, none of those investments are really going to work out. Those types of investments, high multiple companies, companies that have no earnings, these companies are going to deliver losses. What you have to own as an investor are real inflation hedges. Companies that earn money today, not that may earn money in the distant future, because no one's going to pay for some potential distant future earnings in a high interest rate, high inflation environment. Even if the central banks are keeping interest rates artificially low on the short run, long rates are going up and inflation is going up even more. So you have to own real businesses. And because inflation is going to be so pernicious, consumers are going to have to cut back on just about everything they buy. And so what they're going to have to be buying are the products that they need, food, energy, things like that. So you want to own companies that sell goods and services that people have to buy, not what they buy after they buy what they have to buy, because they're not going to have anything left over for that. You got to get out of U.S. dollars. You got to get out of U.S. Stocks and bonds. You got to get into precious metals, gold and silver, mining stocks, other natural resource companies. These are the stocks that haven't done very well on a relative basis over the last 10 or 20 years as the Fed was inflating this bubble. They're going to be the ones that do the best as the air comes out of this bubble.
Small ebook, big impact, the wealth tree. The only 4 ways that will make you financially free forever. Download it here for free.